Hey, good morning. What's going on, guys? Hey, so today I want to talk about NRGD, Microsector U.S. Big Oil, negative 3x inverse leveraged. So pretty much this is a ETN or exchange traded fund that was brought to you by BMO, which is the Bank of Montreal, right? So they trade these different notes based off of big oil and whatever commodities that they're going to be dealing with. And in this particular one, it works off of the negative 3 times value of the opposite of what oil is doing. So if oil is doing good and it's going up in price in terms of the barrels, of crude oil or whatever, then this fund is going to go down in value. When oil is down in price, this fund is going to go up in value. So this exchange traded note will go up in value if the price of oil is down. It works in the opposite way. So if we take a look at what's going on right now, we see that it's $4.90. It raised up 50 cents during the trading day, which was Friday. It's up 11.06% in the day. It went down 12 cents after hours, or negative 2.39%. So we can see where it opened at somewhere around here. We saw a small little jump up to 472 before dropping down to one of the lows of 452 and a little bit lower. And we can go over here real quick and show you where I'm in at, right? So I got in earlier this month, or actually, in June, early in June, maybe June 16th, something around there. My average cost was $469. So I bought 100 shares. We spent $469. Our total return today was $38, or positive 8.41%, and total return was $21, or 4.48%, right? And the reason why the today's return and the total return are different is simple. The price that I bought it at obviously dropped lower, so we had to make that money back up, right? So you can go down to about, you can see, hey, the 52-week low is $3.44. That happened recently. The 52-week high was $304.72. That happened around possibly the March time frame when everything went haywire, right? So we can go over here. You see that I have 2 canceled sales, mainly because I was thinking about selling it off at about $5.69 or $6.69, making a quick $100 or $200, but I decided to cancel those off. You can see where I actually bought it at. It says I submitted it January 6th, actually. So whatever date January 6th was, whatever date that was, we purchased, and we pretty much been holding on ever since, right? So we'll go back up here. That was a daily chart. We'll click on the weekly chart, and in the weekly chart, it shows that we're up by 61 cents overall, positive 14.22%. So it's up from the lows. It's now up $4.90, and then there were some highs that it hit. You see, it's 488 right there. It hit up into the $5 range, and but when we hit the monthly chart, the 3-month chart, we see that it's negative. We hit the yearly chart, we see that it's negative. And if we hit the 5-year chart, we see that obviously it's negative, right? They don't even have 5 years worth of information. We'll go back to the monthly chart. Monthly chart saying that it's down $1.15 or negative 19.1%, right, for the month, right? So if it went up an extra dollar, it puts it at $5.90. You add that 10 cents to it, that puts it at $6. You had that 5 cents, $6.05. So somewhere around $6.05 will be the break-even point for the monthly chart. So if it made it back up to 605, we'll break even. And for the 3-month chart, we're down $29.81. So obviously that takes us back up into the $34-ish dollar range, or whatever, $35 range, that we would have to break. That's a lot of money going upwards. And will it make that up in 3 months? Who knows? It always depends on what's going on in the oil market, whether it's going to be bleak numbers, whether it's going to be positive numbers, so on and so forth. They know that the energy market is going to recover really slowly. They already know this. So this is a waiting game. So once again, We're in at an average cost of $4.69 right here. We have 100 shares. It's 11.24% of our portfolio value. We're up $21 right now. So if we decided to get out right now, which is tomorrow, Monday, we'll get out with $21, right? And if it possibly dropped down, back down into the low fours, we could play the game, get in at a lower number, watch it ride back up into the $5 range, possibly come out with close to $100 on that tip. Will we do that? I don't know. Right now, I'm more so into holding because it seems to be showing, obviously, in the daily chart, in the weekly chart, where it's jumping up, right? So in the daily chart, it never made it back down into the $4 range. If we go to the weekly chart, you see where it had its lows at the 396 range. It did jump up to the higher fours, 488. It went back down to the lower fours, 420. It did pretty much a double bottom, what they call it, where it hit that range twice, and then it's been hovering in the mid fours. So you haven't seen it back. Even when it dropped down to 445. We saw it again close in that 445 range right around here. So you could have got in a second time, even a third time, right around that range. And then since then, we really haven't saw it that low. So that was on the 28th, but since the 29 happened, we haven't really seen it that low. So 29, 29th is when the market pretty much stopped. 30th, 31st is today, whatever. But so when the market starts back up, it's going to be February, right? So what do the analysts say? We're going to go over here to a different tab, and we're going to look at MSN Money, right? So MSN Money has it at $5.02. They show you the after hours, $4.90, drop 12 cents, which is the equivalent of what Robinhood has right there, right? Go back to MSN Money, and we're going to look right here, analyst recommendation. So 1/30/2021, they give it a buy. The 1 year price target for this thing is $103.75. $103.75. Analysts, these 15 analysts gave their price target, $103.75. EPS estimate is $8.37. EPS is earning per share if you don't know. So we got 5 that gave it a buy. I don't even know what that 1 is for. They didn't even tell me what it was. They're giving you a 9 on a hold and 0s for sale. So nobody is saying sell this thing. Everybody is saying hold. Now, if you just based it off of price alone, and we go back down and say, man, this thing is close to the 52-week low, $3.44. If one gets something close to the 52-week low, we would think that, hey, if you held, as time goes on, you're going to make that money because you're closer to that 52-week low. If you get somewhere back in the middle range, you would be like $100, $150 range, something like that. And that would be the middle range, right? So usually stocks go back to their little middle range. But NRGD is a bit different because it's not actually a stock. It's based off commodities, like we said earlier, right? So we're going to go back to MSN Money, and we're going to take a look at that $103.75 assessment, right? So if we're holding 100 shares and it hits that 103.75 range, what we've made is $10,375, right? So that's what we would have actually made. We can just do a quick calculation, and we'll go 100 shares times 103.75 equals, and I was right, $10,375. If we minus out our $500 that we invested, we're just going to round it up to 500. We come out with $9,875, right? So pretty much we come out with close to 10 grand off of $500, and I'm not even saying we're $500 in, we're $468 in. Actually, we just rounded it up, but you see, $9,000. That's if it goes up to the $103.75 that the analysts say. Now, I'm a practical person. I believe that we're going to see it rise up, and I believe we're going to see it hit close to that $100 range. I'm more so looking at it when it hits the $75 range, put the trailing stop in. Let me put my trailing stop in. For those of you who don't know what a trailing stop is, it's pretty much a stop loss that you put in that follows the price as it goes up. So it locks in a specific amount or a specific percentage that you put in place. So if you said, hey, I don't want it to go down more than $10, and it went up to $70, at some point when it dropped down to 60, it'll take you out the trade. So you'll lock in those profits. You're not willing to lose more than $10 per share. So if you go $10 times 100 shares, that will put you at what, $100, something like that, or actually $1,000 or something like that, or whatever it is. And you don't want to lose, you don't want to lose that money, right? So as it continues to go up, and you say, hey, it went up to 70, and I put my stop loss in. Let's say it never dropped back down to your stop loss of 60, then it decided to continue to make its way up. Once it made its way up to 100, 103, you may decide to say, hey, I'm gonna make my trailing stop a little tighter. I want to put it at $3. So once it drops down to right at that $100 range, you may decide to go ahead. It hits that sell stop and that trailing sell stop, and you'll go ahead and get out of the trade. It'll take you out automatically, and you'll come out at $100 even, minus whatever fees Robinhood or whatever broker that you're dealing with has, and obviously you see $10,000. And once again, I basically put $468 in, rounded up to 500, and we're going to come out with 9,000 and some change, right? So they're giving it a buy, and so we can look right here and look at their revenue. They have basically $25 billion in revenue. They have $4.85 billion in net income. Enterprise value is $164 billion. Net profit is about 20%. PEG, price earnings growth, is 4.46. I'm not gonna go through the beta. Forward PE ratio is 11.27. Return on capital is 0.57, really small, but it's all good because we're talking about billions. Book value per share is $87.71. This is the actual value of the shares. If you don't know what book value is, the actual value of the shares, right? So right now, we're at $4.90. That's the actual going price for it, $4.90. So this thing has lost a ton of money, so it's just a matter of time before we see this thing turn around, obviously, with the market going up and down, and we'll possibly see a return to the actual book value and going on up further. Outstanding shares, 643 million. And they talk about last split factor date, not really giving anything there, and last dividend date, not really giving anything there, right? So we're going to go back to what we have right here, NRGD, and another look, 52-week low, $3.44. 52-week high, $304.72. So I'm going to hold tight. Once again, I got 100 shares. I'm going to hold tight. So with that being said, I'm going to click off of these two tabs, and I'm going to go ahead and click on my Fidelity account. Hopefully it hasn't shut down. It hasn't. And what do I have up in here? I have 2 windows, actually more than that, obviously about 5 windows. But these 2 right here are the ones that I'm paying attention to. And the reason why is because NRGD is the one that we're talking about. It's showing it at $5.02, 50-cent jump during the day. It's not showing it's after hours. And I'm giving you, once again, a chart. This chart is from October to the end of January 2021. So from October 1st, 2020 to the end of January 2021, and you can see how high this thing was right here at the time, and showing you that it was right around that $40 range. And since then, that's like a 3-month, 4-month time frame, and we just watched this thing drop down. But if we go over here in the same time frame, we're watching 11/2. I guess the dates changed a little bit. We watch where when the the price of this particular one, NRGU, which is the opposite of NRGD, the price was down. And as the market went up, you can see the difference. The market went up, it hit in the $66 range, it goes into the $70 range, and then it goes over here close to the $100 range in that time frame, right? Close to the $100 range, because both of these are the opposite of each other. So now we see we have something to kind of play off of when it comes to these exchange traded notes. They're offered by the same bank, Bank of Montreal, right? So this one is 3 times inverse, and I'll click back over here and I'll type it in for you guys, NRGU, right? So this one is a 3-time leverage ETN. Remember, NRGD was a negative 3-time leverage ETN. So they're working the opposite of each other. So this one is going with the actual value of big oil times 3, and NRGD is negative 3 times working against big oil, right? So we're going to go back over here and we're just taking a look at it. Right now, it's going down in value a little bit, right? So it's about $66 right now, and we're gonna go over just a little bit, hopefully to get this up a little bit. We made it a little too big, but we'll go back a little bit more to 10, right? So we see, this is basically, we'll put it at 2 months out. So we'll go November 20. We'll actually just take it to the 2nd. So we're showing you where it was right there, close to the 20s. Actually, it was in the 30s. This was in November when the market was still down. We watched it just drop, right? So we'll look at NRGU. We see where it went up. Boom, it's right there. And we actually can change this to 10-1, show you exactly what was going on. 10-1, this thing was high at 10-140, but back then in 10-1, this thing was low 30s, right? So they're working in the opposite direction. I really just want to show you that, just to give you another clear picture of what's going on with NRGD versus NRGU, and show you that, hey, when NRGU is going down, NRGD is going up. And that's what we've been seeing in the last couple of days of the last week. NRGD has been going up where NRGU has been going down. So the price difference isn't the same, and since we're not seeing a $10 jump in NRGD, like we're seeing with NRGU, but as time goes on within the week or the weeks, we hope to see it continue to gain its value and go up, right? So if we see this thing drops back down into that $31 range, then we'll see this around that area. It'll go back up. So hopefully this will work out to our favor. Once again, if you're not comfortable in doing something like this, don't do it, especially if you don't have the free money. Also, work with your trailing stops. So, hey, even if it did go up to $30 or $40, and hey, you didn't want to go all the way back down, possibly to a $4 range, if it reversed and went back down that far, you put your trailing stop in and say, hey, man, I'm unwilling to go down less than $5, negative $5 a share, or less than negative $10 a share, whatever it is that you set. And once it hits that stop loss, it'll take you out the trade, and you'll make whatever it is that you make. Because once again, if you put $500 in and you made $1,000, hey, you made 100% of your money back. You doubled your money, right? So if this thing goes from 500 to what the analysts expect, $103, you've made a ton of money. I don't even know the percentage on that. I'm not even going to do the math for that right now, but you would have made a ton of money. So once again, if you go from from 500 to 1,000, you doubled your money. But what happens if you go from 500 to 5,000? That'll be half. So if you hit right around 50, 50-ish, or 53-ish, you know, you would have made somewhere around $5,000, you know. So, and that's if you got in right around where I got in at. But if you got in lower, you got to make even more money. If you even picked up even more shares than me, you got to think about it. I'm dealing with 100 shares, and it's going to pay off hopefully with $10,000. If one picked up 200 shares, they would obviously have spent more money than me, but on the back end, if it goes up half that amount, they would make that $10,000 when it just went to $50 range. But once they actually went up to the $100 range, they would actually obviously make $20,000 or more. And that's just if a person decided to spend close to $1,000 or so. But anyway, I'm gonna go ahead and close this thing down and give you something to just look at. NRGD, NRGU. NRGD is the one that we're in, and I'll also give you a closing mark. These are all the stocks that I follow, all the stocks that I'm in, but I don't really care about what's going on with them right now per se. I really want to talk about the dividends, right? So these are the dividends that they're paying over the year, and some of them pay monthly, some of them pay quarterly, right? So we have PSEC right here that pays a quarterly dividend on the 40 shares that I have, which is $2.40. So times 12 months is going to give me $28.80, $25 and 20 cents is coming from BP. And then we have another $144.78 coming from GER, which pays us the highest. And then we have another $76.48 coming from CEN. So remember, when we got into these things, we only own 25 shares of CEN, and that's about $200 and something. So off of $239 in value, we're down by $42 actually, guys, and I'm going to get $76 back in a year's time frame. You know, out of $623 of value from GER, I'm going to get $144 of that money back in a 12-month time frame from GER. And then same thing with BP. BP, we got about $400 in. We're not going to get as much as the other ones. We're going to get back $25 because they cut the dividend. If the dividend was still up at 62 cents, then we would obviously clock about $52, $53, something like that. And then we have PSEC that cut their dividend down a little bit, but we're still going to collect off of $252, we're going to collect $28. So over 10% is what we're looking at when it comes to PSEC, way over that amount when it comes to GER and CEN, right? So when we look down here, our total for 12 months that we're going to be getting from about $1,500 invested is $275.26 off of $1,500. So if you know anything about investing, if you were just putting your money in a bank and letting it sit, if you had $1,500 that you weren't messing with, you're not going to make $100 off of that or $150 off that in a year's time frame. What you're going to make off of it is a few cents. You may come out with maybe $1.50, possibly, but 9 times out of 10 is going to be way less than that. You know, so if you let it sit in the bank. So I will tell you a quick story before I let this thing stop. I put about $3,000 inside a bank account about 2 years ago just to see how much money I would get off of it. This was Navy Federal, and they gave me 7 cents for the month. So that's on $3,000. They paid me 7 cents for the entire month. So if you go 7 times, 11 or whatever, how many months the time frame is going to be, you see that I wasn't even going to make $1 off the deal. So anyway, you guys have a great day.